Today's video, I do want to give you guys an update on the Japan basket, Eurjpy, Gbpjpy, as well as Nzdjpy. If you're new here, sub would be appreciated. If you enjoyed the video, a thumbs up would be appreciated there as well. So it really helps the YouTube algorithm and show these videos to other people to be educated as well. Now, if you remember the last time I spoke about the Japan basket, I told you guys that the market was going to plummet from exactly where it is there. We can see how the market plummeted to the downside. If you do follow me on Instagram, you'd have noticed that I have purchased the Gbpjpy at that point. And hopefully all of you were in, and now it's time for some good selling opportunities in the market as well. Funny thing is, I had told one of my students, or I told my students this morning, go and do the opposite of what I did on this video, meaning that the opposite would be up instead of buying Gbpjpy into sell it. And then someone did not understand what I said, so in his honor I decided to do this entire video. So let's start on the monthly time frame. But before I do this, it's very important that you understand one thing. Now, it's very clear that the Japan yen has been quite bearish for the lateral part of this entire couple of months, right? And the biggest reason for this move, it's basically it's toward higher interest rates in the US, making the dollar still the dominated asset for more attractive for investors seeking higher returns. Investors will always look for countries that has got higher interest because they will get a higher return on their investment. Now, Japan has not been hiking the interest rate and is still struggling to get back to pre-pandemic levels. Kuroda, who famously rattled markets with a surprise shift to negative interest rates back in 2016 before settling on the yield curve control, that guy kept on saying that it's too early to cut back on monetary easing and raise interest rates in Japan. Where inflation remains relatively muted, the different stances are helping weaken the yen. We know that. Other factors include the strength of the US economy, its labor market, while Japan continues to lag behind its peers in recovering again to pre-pandemic levels. So this is the price that you pay if you don't want to hike your interest rates, because nobody wants to invest in a currency that doesn't have high returns. Any case, let's look at the technical breakdown over here. Now, here on the monthly time frame, once again, it's clear the market had been stuck within this consolidation. Market then broke out. Market printed support there. Once support is broken, it becomes the exactly resistance. We had this massive impulse. So after an impulse, you expect a correction. Then the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. So we can see how the market had tested and is rejecting the 0.382. Unfortunately, there's nothing left. There's nothing to the left here, so we're just going to continue at looking for bullish momentum for the market to go and test that previous level of support that is now turned resistance. Here on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how the market here had currently broken above the strong level of resistance. Now, like I said in the previous breakdown, I said expect the market to print this W formation. After a W formation, you expect to pull back to the neckline before that continuation to the upside. Now, today is Thursday. Tomorrow is Friday, also the NFP. So we can definitely expect the market to continue higher. Pull back, hit this previous level of support, resistance that would then be turned support before continuing this move to the upside, giving us a good selling opportunity on any pairs trading against the yen, which is also very much overextended to the top there as well. Now, here on the daily time frame, what do we have? Now, from a daily perspective, we've got two confluences. First, we've got the confluence of this overextended W formation. After an overextended W formation, you expect a pullback to the left leg before the continuation to the upside. We also have this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low. And as a rule of thumb, the market always pulls back to at least 50% after a massive impulse, which is exactly what we got here. Now, to measure this this next impulse, you take your Fibonacci from the low to the high of this correction, and you can see here we do have the minus 27 lining up perfectly with the structural level that we have over here, making enough room for the market to go and test that previous level as well. Next up, we do have Eurjpy. Now, Eurjpy, the price action is very interesting over here. Now, Eurjpy, as we can see on the monthly time frame, Eurjpy had also printed this overextended W formation, came back to test the neckline, but because this market is so heavily extended to the upside, we can expect a deeper correction. Also, if you look left over here, you can see the market last month had broken below the strong structural level, acted as support multiple times there, came back, tested it as resistance twice, broke above resistance, came back to test it as support, support did not hold, the market broke below back, then come back to test it as a resistance. So we can see how the market is testing, rejecting that level. A further pullback is definitely expected, as this market has been quite bullish for the lateral part of the year as well. Now you're on the weekly time frame. What do we see now? From a weekly perspective, we can see the market has just completed this information at the neckline. After the information, you expect a pullback to the neckline, and that is exactly what the market is giving us a further confirmation that we can expect the market to continue bearish to the downside. On the daily time frame, what do we have now? From the daily time frame, we've got two confluences. Firstly, the market printed a strong level of support got broken, market came back to test it as resistance. We had this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low of the impulse. And we can see how the market tested, rejected the 0.382, giving us the strong confluence that the downward momentum is quite strong. Also, we do have the minus 27 lining up perfectly with this previous level of support and this liquidity wick that we had, telling us that we can expect the market to continue lower and test that level over there as well, my good old friends. Next up, we do have Gbpjpy. If you start on the monthly time frame, what do you see now? Here, Gbpjpy, you can see on the monthly time frame had printed these massive liquidity wicks, but never came back to actually fill in all of these wicks there as well. This market is also currently stuck within this consolidation phase, and because this is the low of this this low of the wick over here that the market came to test, we can still expect the market to continue lower. The market also printed this weird looking head and shoulders that we can expect the market to complete before continuing the move to the downside there as well. Now, if you go on the weekly time frame, what is it that we see? Now, from a weekly perspective, we can see this looks like a graveyard over here. It's just wicks and wicks and wicks and wicks and wicks everywhere. So we need to make sure that we do identify clear structure. Firstly, the first thing that we can see is we got this structural level over here that the market had created. Market broke below that, came back to test it as a resistance. The market now also have room to move to the downside because this is the previous level of resistance that the market came back to test it as support there as well. There is a high possibility that the market could come back to print the right leg of this potential information before the continuation to the upside, and then we could see the market start that rally to the downside there as well. On the daily time frame, what do we see now? On the daily time frame, we do have a completed overextended information. You can see this is the previous low that the market created, and this is an overextended information. After an overextended information, you expect a pullback to the right leg before that continuation to the downside. We have an overextended W on the Japan basket. Do we expect to move to the upside? We've got an overextended information, which is a bearish pattern, and overextended W formation is a bullish pattern. We are trading currently in bearish structure, confirming the move to the downside. We have this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low of the impulse. You can see how the market tested, rejected the 0.382 and then the 0.50, which is always expected after a massive impulse to the downside. Now, if we need to get our take profit level, we need to adjust our Fibonacci level on that correction, and we are going to use this low as I would take profit level in the market as well. So we can expect Gbpjpy to continue to the downside in the short term there as well, my good friends. Next up, we do have Nzdjpy. Nzdjpy also on the monthly time frame. What do we have now? From a monthly perspective, we have nothing but a market that's moving sideways. We also have a market that is currently trading above the strong level of resistance, but again, we've had this massive liquidity wick over here. We also have this overextended W formation, and after an overextended W formation, you expect a pullback to the neckline before to the left leg before that continuation to the upside. But we can expect the market to potentially pull back lower before seeing any movement to the upside there as well. Here on the weekly time frame, what do we see now? From a weekly perspective, there is a lot of room for the market to move to the downside, but we can see that the Nzdjpy is not trading in bearish structure on the weekly time frame because this was the previous level of support that the market had broken, came back, once again to test it as support, and I potentially foresee the market had started this consolidation phase. So we need to look for berry structure on the daily time frame. If you drop down on the daily time frame, my good friends, what do we see? Now, from a daily perspective, here is not a lot going on over here. In fact, here is too much going on. Firstly, if you look left, this is a very important structure that the market had created. Now, this level over here acted as a level of resistance, support, resistance. Market broke below resistance and is now testing it as support, giving us a further confirmation that we are trading in berry structure from a daily perspective. We have that massive impulse. So after an impulse, you expect a correction. And if you take your Fibonacci from the high to the low of this massive impulse, we do have a pullback to the 61.8 that the market tested, rejected. Now we can see the market potentially move to the downside on here as well. Now, if you take your Fibonacci from the high to the low of this correction to get a take profit level, we'll probably see how the minus 27 is lining up perfectly with the previous low that the market had created there as well. Now, the best way to approach this is obviously to make sure that you apply the rules of your strategy that you use to take a opportunity in the market. Thank you for your time, and that's all from my side. And as always, cheers for years.